Hello, ladies and gentlemen. Welcome into yet another episode of Smart Money Sundays. I hope you all have had a wonderful weekend. Those in the States, I'm sure, getting ready to watch the Super Bowl is what I'm doing. I wanted to, of course, as always, make sure you guys kind of had a good outlook coming into the week of trading. Make sure we're kind of all on the same page in terms of bias and expectations, right? And so, really, today it's going to be more so kind of a recap of what was talked about on the prior episode, as a lot of that kind of played out pretty nicely, to be honest. So really, all you needed to do was watch last week's episode, and you would have made some good money last week. Um, However, for the most part, we really didn't see much volatility throughout the week. It was kind of slow and choppy and low volume candlesticks, and we just didn't see pretty significant pushes, with the exception of kind of the Canadian dollar to finish out the week. All right, so if you remember, like on Euro USD, we were looking at, I think price closed the prior week here, and we were looking at opening up and retracing kind of up into this up close for a continuation lower. Right now that we're having that kind of overall higher time frame retracement after having traded into 1.1, looking for that discounted price right down into our demand, right, our higher low, which produced our last higher high, right? And we should be looking to continue to buy with this higher time frame trend, right, from this piece of market structure until it breaks, right? So if it does break, then we can obviously shift our expectations. All right, so for the here and now, again, just kind of looking for buy to sells, continuations down further into 1.06, but more so, in my opinion, into 1.0550, which is where we have that down close candle that was never mitigated, right? You had the sell to buy, right? High volume candlestick, right? Institutional involvement, right? Getting into this market here with this engulfing candlestick, we never kind of retraced and made this market efficient. Right, so I really do want to get back down into there, and until then, we can be looking for retracements as excuses to sell this thing. Potentially from here, although it's kind of in the middle of the range, obviously here, or if we do breach higher, then we have our previous level from last week. All right, but looking for that, obviously, time and price. The move, the continuation should be happening in London Open or New York Open between 2 and 4 a.m. or 7 and kind of 9:30 a.m. So we should be looking for those entries. All right, GBP USD, right? This is one that talked about last week as well, right? Opening up and retracing up into our supply here. Obviously, beautiful reaction. That 4-hour 50 EMA is a nice confluence, dynamic resistance, right? Talking about treating retracements as excuses to sell down into our higher time frame demand, right, where we have that 1 hour down close. Right, which kind of brings us into 1.19300. Right, so very similar to Euro USD, we want to get down into these down close candles here on these XXX USD pairs. Right, so beautiful reaction. Congrats if you caught that move from there. Right, and the same really goes for AUD USD and NZD USD. All right, hopping out to the higher time frames again. Right, we had that last piece of structure here, that sell to buy. Right, the down close candle that was never mitigated. Price just continued, so we're now having that overall higher time frame retracement. Right, and so I do still want to see price dig down into that 6789 threshold. Right, where we have the down close here. And in that instance, we can be looking for potential accumulation. I won't be placing limit orders at these levels on these dollar pairs, just simply because I don't want to fight momentum and try to catch a bottom, right? But obviously the bias is still bullish on the higher time frames, but we just want to wait until that we get that confirmation that we're ready to go. All right, and so until then, potentially, we can be looking to continue with this short-term bearish momentum. This is obviously going to be the first focal point, right? The up close here, especially if we continue lower and then get that push higher, and then one final push into our bullish POI. Perhaps we do run this, right, and get up into further premium, right, this previous low, right, and then see that final move lower. That's certainly a possibility. Okay. So looking for short-term continuations to the downside, and then we'll be looking for that accumulation at our bullish POIs here on these dollar pairs. Right, and again, very similar, NZD USD. Right, want to get down into, which we never did, obviously the 6260 level into 6250, potentially even lower down into here, but really want to at least tap into the down close, which we have not done yet. All right, and so, certainly similar to AUD USD, this is going to be that first focal point, right, for continuations down into there, right? Or, if we open up and we do push higher, then obviously, we have previous low here, we have a bit of supply here, right? But if we do push higher, we should be looking for sells down into that level, right? So retracements as excuses to sell short term, and then looking for higher time frame reversals, right, at our extreme POIs here on the higher time frames. Right, so hopefully you're kind of getting the narrative, getting the theme here on those XXX USD pairs. Pretty straightforward. USD Swiss franc, that's another one that I gave out last week, right, where we have the supply, right, reaction, fail, flips to demand, corrective in nature, right, very choppy corrective price action. We get that sell to buy, right, and we break lower time frame structure to the upside. In my opinion, we should go ahead and seek out the liquidity above these highs here. All right, and so if we do get that retracement, right, then certainly the 30-minute here looks appealing to me, right? So this potentially as a internal draw on liquidity for retracement into discount and that last push higher, that continuation again through these highs. All right, so beautiful trade here on USD Swiss franc. See how we kind of stalled out right prior to our level. It's a good indicator that it's going to work out. All right, then we get that beautiful sell to buy right at our prime time and price. Right, never fails, guys. 8 a.m. Sell to buy, break structure higher. Right, so looking for that retracement into discount for the continuation for one more leg. All right, USD JPY. Right, this is another one we've talked about that has not come to fruition yet. Right, remember we wanted to get up into this up close candle, running out this high. Now we did kind of tap right through this high just a little bit, and we've kind of retreated since, but we didn't trade into this level. I really want to get into there, 133.25. I think that is certainly still on the cards. You can see a little trickle, and that last push higher, looking for that buy to sell. Right, and then seeking out the liquidity resting beneath these lows. Right, so that still looks good to me on USD JPY. It's just a matter of being patient. Okay, GBP Swiss franc. Now this one is relatively tricky, right? We're kind of in this higher time frame channel, this range, creating these kind of higher lows and lower highs. Now, if we think about it from a market structure perspective, right, you have the initial higher high, the initial higher low, which produced a higher high, right? And then we retraced and we didn't create another higher high, right? So our trading range is still this low to this high. This is the range that we're working with right now. And so certainly we can run this low out, trade deeper into this last kind of point of return and maintain the structure, right? Get that sell to buy and then finally make a new higher high. All right, and so I did kind of look at the lower time frame here. There is a nice level at 1.0950. That certainly could be where we react. Right, so again, we just want to see that run on liquidity and the subsequent reaction, and then we can take it on the confirmation for a pullback and a continuation. Now, alternatively, we could trade deeper into discount, have a higher time frame retracement, kind of down into here, which is that last supply to demand flip that we never kind of retraced into. So we certainly could have that push lower, right? Again, relatively speaking, this is the higher time frame trading range, and we would be nicely discounted for a continuation, right? But you get the narrative, right? We either have, we have a couple of options for, how this is going to play out. We just have to be able to react and adapt, and that only comes with the proper mentorship, right? And the necessary experience. All right. So, if you do lose this one, so be it, right? You take it on the next one, you make all that money back and more with a higher risk to reward, catch more pips. All right. Euro JPY is still ranging, still just chopping around. Again, the markets just really haven't been ideal the last few weeks, guys, and that it happens. Like throughout my 6 years, I can tell you there's been many times where you've had 3, 4, 5 weeks of just garbage price action, and you have to be able to not get tempted, to force trades that under normal circumstances you wouldn't take. You just have to relax and be patient. Take your losses on the chin, get over it, move on. You're going to go on winning streaks too that are going to far, surpass and outweigh those losses that you've taken, right? It's just part of the game. You have to have a long-term perspective. All right, but Euro JPY, nothing's changed here. We have run out this low. Again, I really want to see this run on buy-side liquidity here, right? While simultaneously trading into our demand to supply flip, right? For a final higher time frame sell-off, right, through our equal lows as the target, as the draw on liquidity. Right, so I want to get up into 144 for that final significant swing to the downside. All right, so everything in between is just noise, it's just garbage range-bound markets. We want to be sellers above old highs. All right, nothing's changed there. Same with CAD JPY. All right, nothing's changed here either, just ranging. Want to get above old highs to look for sells. 100 flat, round number. It's going to be that first focal point. If we do breach higher, then this is going to be the POI 2. All right, and until then, certainly could look for potential counter trend, right, or lower time frame trend continuations, however way you want to look at it. But we did have demand here with nice liquidity run out, right? Sell to buy on Friday with the Canadian dollar strength. So we certainly could look for that quick intraday retracement and push higher into the 100 threshold. Right, then we should be looking for higher time frame sells. All right, AUD CAD, just wanted to highlight this one for you all. This is one that obviously I gave out to the T on last week's episode as well, 9380. Just go back and watch if you don't believe me. 9380, beautiful wick entry, and just collapsed from there, right? So nothing really in terms of the here and now. We are now creating, these lower highs, lower lows sequence after a significant rally to the upside. We are finally retracing, right? So we'll continue to follow this trend until it breaks, right? If we get above here, right, then we'll be shifting back to the upside. Until then, we should be looking for continuations lower now that we've confirmed a new set of lower highs and lower lows, right? And then naturally, just looking at this looks like a demand to supply flip, potential retracement continuation. Okay. Certainly trade down into this 1 hour down close that we talked about last week as well, and we'll see what kind of reaction we get from there. Okay. So that's ACAD, beautiful trade. Congratulations if you took that opportunity that I laid out perfectly for you all last week. NZD CAD, gave this one out last week as well. Unfortunately, I gave out 8,550. I rounded it up a little bit, and we just came shy of that. Just shy, unfortunately. It is what it is. It happens. So missed that one, but did catch the AUD CAD opportunity. Now in terms of the here and now, right, we've made a new lower low, just following the lower time frame sequence. Right, you have that bit of demand, the reaction, and the flip to supply, continuation. Right, it's just like clockwork, guys. It's just the habits that you have to form. Right, it's the same types of logic repeating themselves and manifesting themselves in the markets, and that look a different way, but it's almost always the same logic. So you master the underlying logic, you'll be able to understand this like the back of your hand. All right, so that's NZD CAD. Again, looking for retracements kind of into 8,500, 8,490 for continuations lower for the time being. Just going to highlight GBP CAD as well. This is another one that I gave out to you all. Really crushed the CAD pairs last week, guys. Remember, gave out this level last week, kind of that 1.6300. Took a little heat, right? But beautiful follow through, hundreds of pips already, right? From that level, 225 to be exact, about to run out this previous low, right? So, certainly if we do, make another lower low, then continuing to follow this quick lower time frame trend to the downside, obviously we have that bit of supply, that demand to supply flip for a potential retracement and continuation, right? But we don't need to, doesn't look the cleanest. We don't need to get ahead of ourselves. This was really the opportunity here at 6,300, so congratulations if you caught that. And then the last one to highlight, guys, was CAD Swiss franc. Remember, we talked about potential buying opportunities into these perfectly engineered equal highs, right? And we did get a pretty steep retracement, but right down into this demand here where we accumulated and then sprung to the upside. So congrats if you caught this move, especially if you got it from this extreme discount, the very tight stop loss. That's awesome. But we have broken structure back to the upside. I'm still looking at targeting these highs as the draw on liquidity. So I'm just going to treat intraday retracements as excuses to buy this one. Obviously, naturally, this should be the level. This bit of supply here, reaction, flip to demand, retrace, continuation. Very simple, very straightforward, right? We just need the right time and price as that added